still at one standard deviation oversold. It's all to play for. We've barely started. NASDAQ, another beautiful logarithmic trend. I mean, this is a killer. It's all you need to know. Is the world going to be more digital tomorrow than it is today? Yes. Will it be more digital in 2 years' time than it is today? Yes. Will technology reach more adoption in the coming 2 years? Yes or no? Yes. I ran that poll on Twitter. 95% of people agree with me. Yet most people keep missing this trend. They don't want to believe it. It's expensive. I think it's a bubble. Blah, 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 blah. Meanwhile, best fucking trend you've ever seen. So just capture the trend. It suggests the NASDAQ somewhere between 25 and 30,000 at the end of this cycle. That's another great set of returns. So those are the two mega trends. How do they compare? Well, simply put, going back to 1990, kind of the dawn of the internet and computing ages, the NASDAQ has just relentlessly outperformed. All of the noise you see on Twitter, mean reverting, the NASDAQ's expensive, blah, 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 blah. It is the biggest trend you've ever been given. And many of us in macro land to the right tail, which is amazing. So now when we put this all together, we can actually forecast using a number of proprietary things we use at GMI out into the future. Please do not expect this to be a crystal ball. Do not expect these exact targets. It's directionally going to give you an idea of what the next 2 years look like. It gives you that target that we talked about before of about 21,500 in the NASDAQ by May or June of next year. It kind of looks like it kind of holds a bit after that. Maybe there's a correction, maybe not. Maybe it dislocates a bit. As you've seen, there's plenty of parts on the chart where liquidity can correct a bit, but the chart keeps going. That's 2015, for example. That was typical then. But by the end, it says the NASDAQ would get to about 27,500, which is exactly where that log chart showed it as well. So I like it when certain things come together. So basically, all you need to take from this is there's plenty of upside to come. Of course, there'll be ups and downs. But in end of 2025, you'll look back and you'll have come a long way. And that is a great trade. With Bitcoin, it gets even more interesting. You see, that gives us a kind of extraordinary set of numbers. Why would I not choose that? Well, because Bitcoin year on year Bitcoin divided by the NASDAQ year on year also follows M2. So when liquidity conditions are rising, crypto outperforms tech stocks. And that's because of the structure and incentive systems built into a tokenized ecosystem, where you're owning part of the underlying network and you get paid for the adoption of the network. Some equities can look like Bitcoin. We've seen NVIDIA, for example, see network adoption at scale, and it ends up looking a lot like Bitcoin. But the index as a whole, it will always underperform. So that's why I'm so heavily weighted in the crypto space. Beautiful chart here, Fed net liquidity and Ethereum. Bitcoin has actually outperformed Fed net liquidity, the beach ball underwater. Why? Because of the narrative around the ETF. Also, in macro crypto spring, Bitcoin always outperforms. Much like in macro spring, treasuries tend to outperform credit. Later, when we move to macro summer, liquidity charts. As liquidity rises, alts eventually start to massively outperform. We're in early altcoin season, and we're seeing signs of that everywhere. DeFi has done really well. That was like DeFi was the early cycle last time around too. There's been a breakout. Solana, that's an alt. That's done really well. But we're not yet at 50%. Once we start to get to 50% is when things get crazy and everything goes up. That lies ahead too. I have an asset management firm, Exponential Age Asset Management, and we have a digital asset fund of hedge funds. So we invest in digital asset hedge funds, the best in the world, to try and capture the alpha of stuff like alt season. It's hard to find the right coins. It's not an easy thing. So we farm it out to the experts and let them do it. And we've been skewing our whole portfolio based on this top-down methodology that we have. There's a lot more to it, but the top-down methodology has meant we're pushing out the risk curve to make sure that we capture the alt season and an outperformance of the overall crypto cycle. Your job is to not part with your coins until 2025, particularly towards the end of 2025. That's your one job. So anyway, you've got the brief. Hopefully you'll remember, again, repeating the words, not to fuck this up. Okay, finally, one thing at Global Macro Investor that we talked about 3-4 months ago is we said we think Q4 is going to be something that is bananas. As the spigots to liquidity start to open, it should cause a kind of dramatic increase in prices. Part of that is the seasonality of the S&P 500. Here it is. It's been a beautiful chart, and off we go to the races. We should finish the year strong. I think we finished the NASDAQ, S&P all-time highs. So nice finish to the year. Same with the NASDAQ. 93% correlation with seasonality. Off we go to the races. Nothing unusual. You'll have a correction or two en route, and you'll have some big spurts into the end. Everyone's going to be benchmark chasing at the end of the year. Let them do it. Just hold it. But what gets interesting is next year, the seasonality remains bananas. Presidential election years are very positive. The stimulus. Amazon and Coinbase have been great. The Amazon bust when it fell 97% coming out of the .com crash. Coinbase has been following that beautifully, as has ARK and a whole bunch of other things. And Coinbase is starting to wildly outperform, and it should continue to do so. Coinbase, I think, is one of the single most superior equity bets in the world because of what we know from the Everything Code, where crypto should be going over the next 24 months. Coinbase is going to be a massive beneficiary. So I think it's a great opportunity. This stuff works. It certainly worked this year. And I still think it continues to play out into the coming years. It won't be perfect. There'll be times when you're questioning me. There'll be times when I'm questioning myself. And maybe it's right to do so. Things can change, but I'm assuming they don't a lot. And using this exact framework from last year, we nailed in Global Macro Investor and for Real Vision Pro Macro 660% in Solana, 96% in ETH, 72% in the exponential age basket, 60% in semis, NASDAQ 47%. And that's really what I think is coming. So Tesla lives in two worlds. It lives in the world of the Russell 2000, cyclical car company. Sales are sluggish, inventories are stacking up, prices are being cut. But it also lives in techland, where AI is growing exponentially, robotics, EV, all of the themes of the exponential age. So right now they're fighting each other, which has kept Tesla down. I mean, yes, it's outperformed. I mean, it's done very well. I mean, it's up 200% this year or whatever. But the real move comes next year when the business cycle turns higher, car sales go up, inventories fall, and the exponential age really kicks in. Then Tesla's kind of unbeatable as a stock that represents all of it. So I really have my eye on Tesla. ARK is the forward-looking part of growth.